Now, the German Economy Ministry today provided a new outlook that industry could grow a bit slower, but with general positive reading for 2018. What else is in the report?
Yeah, a very interesting report that was provided by the German Economy Ministry today. Pretty much a good outlook for the rest of the year, so for the remaining what do we have, 2 or 3 weeks pretty much in 2017, and also with very strong and good indications for 2018. We remember we just got a few weeks ago the business climate index here for Germany indicating that we are going to see at least a 2% plus for the next year when it comes to growing of the economy. Also, experts are expecting a very strong gross domestic product for 2018, mostly exports will benefit from all of this. We are really seeing that the world economy is recovering, and we are also seeing that really companies seem to be keen in investing. Also in the building sector, we are seeing right now a boom, so all of this looks very promising. And before I let you go, Jimmy, I also want to share some news with you that is pretty much just breaking now here in Germany. The low-cost carrier Ryanair most likely is going to see for the first time in the company history a strike. There has been a meeting a little bit earlier with the cockpit union here in Germany, and they have announced immediate strikes could be possible. So this could be also very interesting for your viewers who might be traveling very soon here to Europe. Just in Germany, Ryanair has about 10 bases. Pilots there have been fighting for a long time already for better working conditions. Ryanair has been struggling with this a lot. Many pilots have already quit their contract with Ryanair, trying to work now for other airlines. Because of that, Ryanair had announced just a few months ago that they would have to cancel thousands of flights because they just don't have enough pilots.
Wow, that's not just good news for that airline. Well, Daniel, let's continue to keep an eye on that story and, of course, Fed and ECB. See you tomorrow. Moving now to the U.S. stock index. Futures pointed to a slightly higher open today ahead of several economic data releases and the start of a 2-day policy meeting by the U.S. Federal Open Market Committee. On the data front, the National Federation of Independent Business Survey is expected to come out at 6 a.m. Eastern Time, then followed by Producer Price Index data, slated to come out at 8:30 a.m. Eastern Time, and the monthly Treasury statement due out at 2 p.m. Eastern Time. Meantime, the FOMC will begin the first day of its 2-day monetary policy meeting. The central bankers are expected to deliver a decision on interest rates at the end of the 2-day event on Wednesday, where investors expect the Federal Reserve to raise rates for one more time this year. In Asia, markets closed slightly lower today ahead of the Federal Reserve's December meeting. The Nikkei 225 drifted lower by 0.32% to close at 22,866.17 after hovering near the flat line earlier in the day. Across the Korean Strait, the Kospi edged down 0.42% to end at 2,461. Australia's ASX 200 tacked on 0.25% to close at 6,013.2, with energy stocks climbing 1.26% following the rise in oil prices. Hong Kong's Hang Seng Index reversed early gains to slide 0.57%. Mainland markets also lost some ground. The Shanghai Composite fell 1.24% to close at 3,281 points, and the Shenzhen Composite lost 0.97%. And back here in Africa, South Africa's Steinhoff is considering selling stakes worth a combined $1.4 billion in local companies PSG Group and KAP Industrial to help plug a liquidity gap at the retailer. Steinhoff, the owner of more than 40 retail brands, including Conforama Mattress Firm and Poundland is fighting for survival after more than $14 billion was wiped off its market value last week following its disclosure of accounting irregularities and the exit of its chief executive. The company has said it planned to raise around €2 billion from the sale of non-core assets and the proceeds of debt repayments from its African unit Sternoff Africa Retail to fill a hole in its balance sheet. Sternoff owns about 25% of PSG, a R60 billion investment holding company, and 39% or of diversified industrial group KAP Industrial, which is worth around R6.1 billion at current market prices. And South African drugstore chain Dischem has raised R1.120 billion from sale of a part of the shares held by its senior management team. The sale of shares will see founder and chief executive officer Ivan Saltzman owning 52.7% of Dischem's issued share capital. Dischem sold 32,000 at a price of R35 per share through an accelerated book build, which was offered only to qualifying investors and not the public. The book build price is at 9.3% discount to the pre-launch closing price of R38.58 per share. The company, which listed in November last year, has grown from a startup in 1978 to a major health products retailer, which runs about 100 stores. And Canada's Fairfax Africa Investments Proprietary Limited will not proceed with a plan to buy 23% of cement producer PPC for R2 billion. Last month, PPC's board said it had advised Fairfax that it would not be recommending the Canadian company's partial offer to shareholders. On December 8, the independent board received Fairfax's formal notification that it will not proceed with the partial offer and that accordingly, the Fairfax partial offer circular will not be posted to PPC shareholders. The takeover regulation panel had granted Fairfax an extension to post its partial offer circular until December 12. Fairfax offered to buy 23% of PPC in September for R5.75 per share, or R2 billion, on condition that it was approved by shareholders in order to allow a merger with South African rival cement maker Afrisan. And mining companies in Democratic Republic of Congo say the proposed changes to the mining code adopted by the lower house of parliament last week will do lasting damage to investment in Africa's top copper producer. The process of reviving the 2002 mining code in Congo has dragged on for over 5 years, but the lower house on Friday approved a bill that would increase taxes and royalties and sent it to the upper house Senate for a second vote. The measure would also increase the state's minimum unpaid share of new mining projects and require that Congolese investors hold at least 10% of shares in large-scale mines. When we return after the break, Brent crude cracks $65 per barrel. Details in a moment.